Well, hello there, Mavericks. This is Imri, and welcome to today's currency recap. It is January 4th, 2024. Happy New Year if I haven't spoken to you already. It feels good to be back in the saddle, to be trading the markets again on the FX side of things and the crypto side of things. We certainly have a lot of volatility right now, so there are some trades that are shaping up, at least in short order. So in today's currency recap, we'll be doing a review of the trading day. We'll be going over some current market analysis, and then we're going to wrap things up by taking a look at a few trading setups and opportunities in the currency markets. Let's get started. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep most of the profits generated. So if you're a technical trader with a technically based trading system, we want to meet you. So click the application link in the description below this video to learn more and apply to our firm. All right, let's break down today's market action. Market analysis. All right, so in today's news, the S&P and the NASDAQ fall again, oil also down, and US yields have recovered a little bit, which means bonds are pulling back a little bit. And that's as the market is grappling with rate cut expectations. Is the Fed going to really cut rates as much as they say they are? Or is it possible that they're missing something? After all, they did miss the inflationary surge that we saw over the last several months. Is it possible that they're overestimating how effective the rate cut programs have been? Those are kind of the questions that the market's grappling with, and expect this to be a very important and central theme for the remainder of the year in all likelihood. Now, if we're taking a look at how the markets have performed, crypto after a really dramatic down day yesterday is starting to bounce back. Equities, like I said, slightly down, gold slightly up, oil slightly down as well. Taking a look at the currency side of things, fiat currencies, that is, the yen biggest loser on the day, the euro and the pound outperforming. US dollar and the loonie also held their heads up high, and the Swiss franc hovering near break even on the day. And the biggest loser other than the yen was the Australian dollar, and the New Zealand dollar pretty much at break even also. On the crypto side of things, Bitcoin and Ethereum leading the way at 3% gains each. And then we have Bitcoin Cash 1.86% up, Litecoin 2.16% up as of recording this video. These are reasonable recoveries, but I think the jury is still out, if you look at the price charts, that is, in terms of whether or not this is going to lead to a sustained lift in the crypto market. The major news is that we're downgrading our market outlook now. We are no longer at a +3 since prices have broken below that 20-period moving average, but we are still at a very healthy +2. What's interesting is whether or not we're going to go and meet that 50-period moving average. You can see here we're still flirting with the previous all-time closing high, right around 48.22, and right now we're at 46.89 and change. So that 50-period moving average comes in roughly around 45.60, a little bit below 45.60. If we can get down there, I think that would be a great little flush out, and it would set the stage for potentially a very nice rally for equities as we head, as we kick off this new year. Taking a look at the news events for the week, it's been fairly light at the beginning, front half of the week, but as you can see, Friday we're going to have NFP action. So tomorrow you can expect some fireworks, especially the currency pairs involving the US dollar. And then out of Canada, of course, we're going to get unemployment and employment data as well. So definitely some fireworks to expect tomorrow morning. Be cautious. Okay, taking a look now at some currency analysis, we'll start things off with velocity. So what's interesting is that although the Swissy was hovering near break even today, up marginally, velocity looks very positive for the Swissy. And although the pound is at a +2 on the velocity scale, when you see its currency basket in just a moment, if you agree with my interpretation of it, you'll see how the fortunes in the pound might change in the short term. So we'll have to take a look. On the extreme other side of the scale, we have the yen and the Aussie at -3. All right, so let's head into TradingView now, and I've got actually a fun exercise where we're going to take this currency basket analysis, which is how we do relative strength and weakness analysis, and then I'm going to show you how you could potentially turn that into a trade on a very specific currency pair. All right, so with the yen, this pullback definitely expected. Where are my Elliott wave folks at? You know that once we have a 5-wave movement, we are going to get a 3-wave pullback. So here, I've just slapped these Elliott wave labels on the chart. We have a clear 1, 2, 3, 4, 5, followed by a very clear 3-wave pullback, which we use the ABC labels for. Now, a very common relationship between the A and C waves is for them to be equal in length. Now, if that is the case, and we are going to get that equality measurement, then we do have a little bit more downside to go in the yen. However, that equality measurement is a guideline. It's not a very clear rule, or it's not a rule that's set in stone. I personally think we've done enough in the yen, in some pairs at least, to warrant a recovery. But the broader basket might have to trade a little bit lower before we see another round of sustained yen strength. Once this pullback in the yen is complete, however, I do expect at least a commensurate move to the one that we had from mid-November to mid-December. So, for example, we could see something like this, and that would bring the basket back to where we were trading towards the end of July, which would be a sizable move and a great trading opportunity. Next up is the dollar basket, hovering right against this trend line right now. Let's see if we can take it out. I'll give you my forecasted projection for the dollar. I think we will pull back, followed by one more round of advance. That could take us into this resistance area right here in the basket, which is where we were at the beginning of December, or near the highs, which is more towards mid-December here. So either way, I do see a little bit of a dip in the dollar, followed by some dollar upside, and then potentially we could then look for a larger move lower in the dollar. I'm overall bearish on the US dollar this year, unless something shifts dramatically with the Fed's expectations or game plan in terms of their monetary policy for this year. All right, moving on now to the Swiss franc. Okay, so the Swissy still looks freakishly strong, and the sideways price action looks more like a trend continuation pattern to me, leading to further upside eventually rather than downside. Euro, just trading in a range. As we get closer to the top of the range, however, and we tap into these wicks, these spikes on these candlesticks here, I'd be looking to short the euro. So I still think the euro has a little bit more upside to go, and that would coincide nicely with the minor downturn I'm expecting in the dollar. And then as the euro tops out and starts selling off aggressively, that's where I would expect the dollar basket to start rallying aggressively. All right, so the pound. Pound was a big winner on the velocity score side of things today, but look at this price chart. We're in an area of resistance, right? So measuring this resistance based on this significant swing point, and we can see that prices have kind of broken through both sides of this resistance zone. So it's not the best resistance zone I've ever seen, just given how the market hasn't respected it so cleanly on both sides of it, but we're trading back in. And every time we've traded back into this zone, we have gotten a reasonable reaction. We sold off here, we sold off here, we sold off here, and we sold off here as we traded back into that zone as well. So I am looking for the pound to potentially roll over here for at least a couple days, even if we do get a larger move out of this resistance zone back to test these highs from the end of November. So either way, I think on a short-term basis, the pound could be setting up for a nice trade. Okay, taking a look at the loonie, I suspect we're going to trade higher into this resistance area here, maybe exceed it slightly, and then we can look for another significant downturn in the Canadian dollar. Aussie dollar, so you can see we've broken out of this larger falling wedge structure. We've topped out now, and we're pulling back. It would be very clean technically if we found support along the upper end of this broken resistance line here. And then here we've got the New Zealand dollar. We've broken out of this larger inverse head and shoulder structure, and we're consolidating now. I'd expect more sideways movement in the Kiwi, followed by eventually a significant strong push higher. And then finally, we're going to look at the Bitcoin chart, or the crypto basket. So we can see here, we got this false breakout of this zone here, and now we're trading up, I think crypto as a whole is in a very dangerous zone right now, kind of a no man's land. I would not want to be looking for long crypto positions, broadly speaking, unless we get back above Tuesday's high. And then if we base, then I would be a buyer. Otherwise, I'm happy to let the market do its thing and hopefully pick up crypto at much cheaper prices. Okay, so the relative strength and weakness analysis that I'm doing, and I'm forecasting future relative strength and weakness analysis, all right? So this is a little bit of an insight into my own personal trading plan. The reason I want to do this exercise is because I had a conversation with a trader about it this morning, and I thought, you know what? I'm going to do a live demo in today's currency recap. So here is how I personally use relative strength and weakness analysis. So I'm forecasting this potential downturn in the pound. Remember that. We can see that the RSI on the 4-hour chart is quite overbought. On the dailies, it's slightly a different story. You have a lot of room to go. But again, I'm not looking for, a move that's going to last weeks and weeks. Well, or longer than a week and a half. Ideally, I'm looking for a move that'll last a few days. So on the 4-hour chart, seeing this overbought signal is promising. Doesn't mean that the pound's going to reverse, but it's promising. And then if we look at the yen, I don't want to be catching a falling knife, but I also want to start getting ready for a potential turn. You can see here, just with this ray line, we might have a potential double bottom here, and that's with the RSI greatly oversold. So now I'm going to look at sterling yen, and I'm going to see if there is a potential opportunity in the making. Okay, so here's what I'm seeing in sterling yen. We've got these 3 tops here. 1, 2, and then potentially 3. All right, so what I'm looking for is ideally for prices to tap into these prior highs, tap the liquidity that's trapped there, stop some people out. I think we'll see bears defend this position. We'll see buyers try to take it through. I think those buyers will ultimately get caught on the wrong side of the market, and I'm looking for a big push back down to 178.50. Perhaps 179 would be a great take profit area. So I'm going to be very patient with this one. I really would like to see these prior highs get taken out. Now, conventional wisdom, right? And this is where you have to start thinking in a little bit more of a contrarian manner, especially in the FX market, where markets tend to go sideways in the bigger, in the big picture, intermediate to big picture. So here we've been going sideways since December 7th, and you have to think that if I'm bearish, I've got a stop loss above this high and a stop loss above this high. So if I'm bearish and I get stopped out, that means I'm going to buy my trades back. So as bears get nervous and they're covering their positions, which is going to help send prices higher, it's going to embolden bulls as well. And you're going to see a lot of people buy the top here. A lot of people end up buying the market at the top and selling the market near the lows. So as they buy the top here, and then they get surprised as much larger orders come in and create an order flow imbalance and start sending prices the other way, those bulls are going to get stopped out. They're going to get absolutely slaughtered if this forecast plays out the way I think it is, and then we're going to get that larger move down. And then there will ideally be plenty of opportunities to leg in on the way down. If we don't tap into this liquidity up here, for example, let's say we get a slight new high here, we don't quite make a textbook triple top and start trading lower, then fine, I have that contingency in mind, and that's where I'll be looking for pullbacks and bases to help me scale into the position. All right, so I have a plan B, I have a contingency plan in mind, but again, just a real quick insight into how I'm using relative strength and weakness. I don't think this trade is gonna set up over the next few hours, but depending on what happens with NFP, if the yen really weakens as a side effect, of that NFP announcement, then perhaps that'll be enough for sterling yen to tap this liquidity, and then I'll be looking for a very obvious rejection of that area and looking for prices to head lower. All right, traders, that's the currency analysis for today. In conclusion, always play relative strength and weakness. It is by far the biggest advantage that you can stack on your side when it comes to trading the currency markets. And it goes without saying, pay attention to proper position sizing and always follow your trading plan. All right, traders, that's it from me. Talk to you later. Bye for now.